Hey everybody, welcome back. So Sive Morten is here as usual with the Forex Peace Army.com. We're making an update on the gold market. So yesterday we have a great discussion of the performance of the market and explained why there's some contradiction between the classic tools of the analysis when we saw the failure of the upside breakout of the triangle on the 4-time frame chart, which should be treated as a bearish. At the same time, with applying a bit advanced tools, modern tools to market analysis that we explained yesterday, we showed why this performance is not quite bearish. So the other bullish signs exist that doesn't let us to consider overall background as a bearish, and we can't say that gold is breaking the scenario that we are actually following right now. On the daily chart in general, everything is still looking bullish. We can't call it as a bearish scenario because we have the upward direction, and market now turns in sideways performance. Usually such a consolidation after upward direction is usually a sign of the bullish performance, so market's just building an energy before a possible reaction. It not necessarily might be the reaction on some resistance level, but it might be the some consolidation before important events such as the Fed meeting. And today's will be widely important, actually, what Jerome Powell will tell. It's not about the interest rate cut, but it's more interesting and important how dovish comments will be concerning the quantitative easing, concerning the expectations on the inflation, on the job market, and so on. So all this stuff really have a lot of sense. And from that standpoint of view, today, for instance, for example, in the euro currency analysis in the video, I said that despite market is showing the bullish action, we prefer to stay aside while the Fed is meeting. So it's better to act on the quiet market. The same we could say about the gold. Despite that gold behaves well, and actually in general it keeps the bullish context. It might be a lot of not pleasant surprises on the intraday charts, and I will show you what particular surprises might be. But meantime, currently, until market will not show the downside breakout here, we keep the bullish context and suggest that this target remains. So here is nothing stands outside of the normal classical bullish performance here. So just let's see what will happen. On the 4-time frame chart, this is particular the actually reason why we said that it might be the bullish performance as well, because here is definitely we have signs of the bullish dynamic pressure. So market shows higher lows while the trend shows a point on the downside direction, which can be called as a really pure bearish scenario. So it might be some kind of the preparation for a possible upward breakout. With the reversal here, market also hasn't broken the lower border. So normally, when you're dealing with the classical story of the technical analysis, when the market shows the failure triangle breakout, returns right back down, usually you expect that should happen to the downside. But this hasn't happened, and the market actually carefully holds this trend line as supporting and standing on the same support that we discussed previously. Now, what we have on the lower time frames. In general, we could say that market is forming something bullish, right? So it's easily to suggest that it might be the hand shoulders. And if we wouldn't have, once again, if we wouldn't have the Fed meeting, I would say that theoretically we could try to use it for a possible taking a long position, especially when the market will appear somewhere around 41.95. We could drop to the 5-minute chart, start watching for some minor patterns to take the long position in the bottom of the right arm. Then supposedly it should start working. But today it's not quite simple. So because we have the big ABCD pattern where we have non-completed OP target, it stands slightly below these lows, and today we have the Fed meeting. What will happen on the Fed meeting? Who knows? Maybe everything will be really great, but the first time market makers could start shaking the boat, trying to touch and reach the stop orders that stand below these lows, and below confidence support. Traders also see the fib levels, because if you just watch for it, you could see that, well, it's just a 30% retracement of this most recent action. If you plot the fib level, traders not usually using the Napoli levels, they could use the just fib level. From these lows to this top, 30%, it will be right around these lows, so around 41.60 approximately. So here's also probably some stops exist. And from that standpoint, if you risk the market with trying to complete the OP, even following the Joe Napoli way of the market analysis, he always tells that be aware of the untouched, uncompleted important targets, which we have here. From that standpoint of view, this is your headache. What's particularly we're gonna do, and what we could do, either to just wait and see what will happen on the payrolls. If market, for example, complete the OP, the life will become much easier. But at the same time, we have a risk that we could miss the possible upper performance here. It could start based on these hand and shoulders. So everybody will have to decide for himself. So because you could of course make some combined decisions. So for instance, you could try and take the position based on the hand shoulders, but place stop below the area of the OP and its downside extension, somewhere below 4150. But as you understand, the distance here will be rather significant, so it's more than $50 per contract. It's a really big stop. And here you will have to find a compromise. Or if you don't want to wait, maybe it makes sense to consider some using stop orders. For instance, in the case of the breakout, it's probably you could try to use the stop buy order. So here in the current situation, guys, we do not have a really easy decision. Any decision here will be accompanied by, well, some way of the risk, some kind of the risk. Why also I use this extension? Because if indeed market will start moving to the OP, hand shoulders will fail, right? And usually on the ruins of the hand shoulders, the butterfly appears. So very, very probable that if we will see downside action, it will be down to the 4156, and it most probably will take the shape of some butterfly to the downside. If this will happen, that will be a bit different story. We will have the butterfly right on the confluence, and the major OP will be completed. And that's absolutely different background for position taking. So that's the all options that we could offer. Decide by yourself whether you would like to take the position with the hand shoulders, placing far stop, or focusing hand shoulders and considering just the part of the game. So if it will fail, you could reverse position, or you just could wait for a downside action, or you're just following the conservative approach and will be waiting for OP and completion of this major target. So as you can see, not everything is simple when the Fed stands on the horizon. So that's probably all that I could say currently. My option, as I said, I prefer to not make action during the Fed meetings, during big data releases. I prefer to act later when it will be down, when the dust will settle on the quiet market. And yes, sometimes you're missing some opportunities, but well, this will be another one right around the corner. So that's all for now. See you tomorrow, and let's keep watching what will happen on the Fed meeting.